This is our EasyBot portfolio. This is the May 2022 portfolio where we started on May 19th, 2022. And we have data up through the first week of October, really. So about 505 days worth of trade history analyzed and published so that we can see how the market was moving and how EasyBot was performing during that same time. What you're seeing over here on the right in orange is how the market was moving for that portfolio, that May 19th, 2022 portfolio. What you're seeing here on the left is how EasyBot was performing for that same May 19th, 2022 portfolio. And so we know this story, right? EasyBot was working even while the market was going down. EasyBot was making profit for this portfolio. Very similar story with all portfolios that were running during that time frame. If they had active bots and they were using the EasyBot strategy. But let's take a look at a summary of what happened. So portfolio started May 2022. End date about 505 days later. And the average on this portfolio for all those assets, all 19 of them, was about 44%. So bottom line, our portfolio value, our profit is up 44%. So what that says to us, our final portfolio value went from 19,000 to about 3,080 or so, right? 19,000 to 27,380 or so. Okay. Now, if we had just left the account sit there, right? If we set aside that 19,000 in an account, crypto account, right? Just left it on the exchange, didn't turn EasyBot on, and just let it sit, right? So we know as of the date and time that we started and that we took the analysis of the portfolio, that 505 days, the portfolio is down about 4%, 3.54 to be exact. So the value of our assets, that 19,000 invested in crypto, our portfolio value would be down that same 3.54%, right? So in numbers, all right, we have about $18,327. So no contest there, right? A portfolio without EasyBot versus a portfolio with EasyBot. Let's take a look at Bitcoin. That same time frame, Bitcoin increased in value. Bitcoin actually increased about 3.93%, almost 4%. So if you had some Bitcoin, you gained just by having Bitcoin and holding on to it. Just by having Bitcoin and holding on to it, you made about 4% profit. Compare that to having Bitcoin and using EasyBot to trade your Bitcoin for profit. That same portfolio, we saw profit in the form of about 14.6% for Bitcoin. So if you had bought some Bitcoin and held on to it, you made 4%. If you had bought some Bitcoin and used EasyBot, same portfolio, you generated a good 272% better performance by using EasyBot. You added additional almost 11% or basis points on to your profit performance. So again, no contest. Having EasyBot on, it really does help you generate more profit, right? Everybody, I mean, we're all on the same page with that. We understand turning EasyBot on in the crypto space helps you generate more profit. Let's take it a step further. A few weeks ago, one of the questions that was asked was, Bitcoin's doing well, and over time, Bitcoin has proven to be a phenomenal asset. It has generated large returns for people, made billionaires and millionaires, and it's a solid investment. And we got the spot Bitcoin ETFs coming up with companies like Vanguard and BlackRock and Fidelity, and a lot of other major players are just buying up Bitcoin left and right, MicroStrategy being among the few, Grayscale, and several others, right? And the US government is one of the main entities that holds in the United States a large portion of Bitcoin as well. So Bitcoin is seen as the digital gold of our age and a very safe bet, a solid asset. And over time, it's proven to be very, one, sustainable as well as profitable. So the question was posed, would you take all your money out your 401k and just put it all in Bitcoin? And I thought about that, right? And we had a pretty heated debate about it. We're going back and forth, different responses, debates, and answers, and different strategies some people might employ. But for me, it boils down to not having all your eggs in one basket. For sure, I would never take all my money and put it into any one thing. I did say that I have no problem taking money out of a 401k and putting it somewhere else. Maybe not all into Bitcoin for sure. Maybe, some Bitcoin, some real estate, right? Because we know there are other things besides crypto that can make money for people as far as investments. And again, you never want to put everything in one basket because you never know what'll happen, right? But for damn sure, right, I can pull my money out of a 401k because 401ks, they've proven to be, uh, investments that aren't for the person that's investing in it. But let's take a look at this. This kind of talks about the 4% rule. That's the standard rule of thumb as far as the strategy for withdrawals from retirement accounts. And what the 4% rule talks about is for you as a retiree to get an additional 30 years out of the funds that you saved up, you should do a 4% withdrawal on an annual basis for those funds. So if you're somebody who wants to live off of $40,000 a year when you retire, for the using the 4% rule, you need about $1 million inside of an investment vehicle, right? Producing for you. Okay. If you want to live off of $50,000 when you retire, using the 4% withdrawal rule for annual withdrawals, you need about 1.25 million in an investment vehicle, right? All right. And 4% rule came about really early in this financial freedom kind of roadmap. And it's based on a 50-year period between 1926, 1976. So kind of an old model, but it's withstood the test of time. Okay. Nowadays, even with inflation, the 4% rule still holds true. I want to retire and I want to live like I am making $65,000 a year. 4% rule, I need about 1.625 million in a portfolio, right? And I can take out 4% annually. And in a typical investment portfolio. Okay. So starting there, how do I get this 1.625 million? Right? How do I get this 1.625 million? So one of the main ways people save for retirement was the 401k or the Roth IRA or some other traditional investment vehicle, mutual funds, etc., stocks. And they're used to that average rate of return of about 12% or so. And surprisingly, not every company in the United States, right, offers a 401k. Very few offer a 401k program, but the majority of Americans do work for those few companies. Okay, and the Census Bureau gives us statistics about 79%, almost 80% of Americans work for a company that does have an employer-sponsored 401k style retirement plan. Okay, and the 401k boils down to you setting some money aside and a fund manager using your funds to make profit for you, right? They're supposed to trade your profit in the stock market and generate returns or additional revenue for you. And that may or may not be the case. My thing is this. We know that you can always do better, but we know the average rate of return for 401k is about 12% per year. But let's take a look at an employee average salary. Let's say we're making $65,000. Okay, and we'll go through this slowly. $65,000 per year. All right, a biweekly, that's about 2,500. All right, and one of the things that we're taught early on is to save about 10% of what you make for yourself for retirement. So let's say you want to contribute from that biweekly pay to your 401k. 10% of that, that's about $250 every 2 weeks. Now, if you have a phenomenal employer that's giving you 100% match on your contribution, which is rare, right? It's really rare. you're making an additional into your 401k $250. So altogether, bi-weekly, you got $500 going towards your retirement. And so on a monthly basis, that's $1,000. It's not bad, right? A really nice portion of income going towards your 401k every month, $1,000. Okay. So how long is this process? You're working 8 hours a day, 5 days a week, 52 weeks per year. That's a good 2,080 hours in a year that you work, right? And you can even take off 80 of those for 2 weeks of vacation. But if your salary is about 65,000, you're making about 31.25 an hour. And let's say you did this for 24 years. You worked at a company for 24 years, contributing to this 401k plan. And at the age of 49, you're done. You're ready to retire. You're happy. Okay. Over that 24 years with this company, you've worked almost 50,000 hours and they've paid you $1.56 million. Okay. So that's an employee profile making 65,000 for 24 years. All right. Employee profile. Okay. I'll take a quick pause. Let's go over here. I want to share this information. This is coming out of some Census Bureau data, some Yahoo Finance, some Investopedia information. Look at what's going on with 401ks in the United States. Average balance, or I should say the median income for 401ks, people 35 to 44, $36,000. Nowhere close to $1.6 million, right? Average 401k balance, the average, that was the median. The average is about $100,000, right? So far away from that million retirement. And for me, this is just proof in the pudding. 401ks have failed Americans time and time again. But let's get back to our discussion. The 65,000 salary, and you want to live like after you retire at this age 49, you want to try to live like you are still making 65,000 using the 4%. My thing is, you can do much better than this match of $100, or I'm sorry, 100%. If you just did this yourself, instead of allowing a 401k to build your retirement out for you, if you just kept your money and did it yourself and let the company keep their matching bonus, if you use the vehicle like an EasyBot, you could do better than what you're doing here. Let's take a look. We saw with the employer matching bonus, let's say you start an account with $1,000, and every month $1,000. If you got the 100% matching bonus, every month $1,000 is going into your portfolio, and you're getting the average annual rate of return for 401ks and mutual funds and those types of investments in the United States. You're getting that average 12%. Okay, and you did this for 24 years. There you go. You'd have your 1.6, whatever that number was that you needed to have for your retirement in order to live like you're making 65,000 a year if you're taking out of your investment 4% annually. And this will last for about 30 to 33 years. Nice, right? That's not bad. 24 years to get this up. And over that 24-year time frame, you've made a good 1.5 or so million from your employer to pay your current expenses, whatever bills you have, and any entertainment, et cetera, whatever the case may be. And you have a nice retirement portfolio. But you can do better, right? Let the company keep their 500 and you just use your own 500 in your own vehicle. Because what'll happen is you'll avoid things like their management fees, their transaction fees, their percent portfolio fees, and you'll have a day trader that trades day and night, 24 hours a day, 7 days a week, working on your behalf without the need for sleep or breaks or any kind of rest or any kind of emotional maturity or direction or any kind of additional input needed, etc. I mean, it's just a better scenario for you as the bot looks out for profit versus a human looking out for profit. So let's change the dynamic. Again, now we're looking at the case where instead of you giving your funds to a fund manager, you're using a vehicle like an EasyBot. An EasyBot's been proven over the years, or over this year and a few months, to be able to beat the annual rates of return that traditional investments have shown. But let's say it only beats it by 3-4%, right? Let's say instead of 12, we get 16. Okay. We still made, in 24 years, we still made, using your own money, we still made the amount that we need, and actually a little more. And that's just getting additional 4% compared to traditional markets. We know EasyBot can do better. I'm just being very conservative here, but we know EasyBot can do much better. But again, just looking at getting an additional 4%, which is about, again, 4 points higher, 25% increase on the traditional rate of return, we can meet our goal of getting that 1.625 thousand to live like in retirement we're making 65,000 a year. We got that covered, easy. But we know EasyBot can do much better. We've seen EasyBot do on average for a portfolio 40%. We've seen EasyBot do on average 20%, and all numbers in between, right? But let's say we double the traditional S&P 500 rate of return. Instead of 12, let's say we get 24% from our portfolio over the years. We're still using our own money, no matching bonus. We still start with 1,000, and instead of 24 years, let's save 6 years, right? Let's save 6 years. We still meet our goal, right? Still meet our goal. So not only can we meet our goal, we can do it in less time when you have a higher rate of return using a vehicle like an EasyBot, right? The 401k is limiting because the rates of return aren't as good as what you would see in the crypto space, but also the entry and exit points that you experience over the years, they're not as frequent because you have a human doing your trading versus a bot. And even the fund managers that use bots, the bots only work, right, when the market is up. When the market's down, we see scenarios like we saw in 2022, where investments lost on average in 2022, 401ks dropped 22.9%, right? So bots only work when the market's doing well. You can save time by getting a higher rate of return and entering the market with your own funds versus having a 401k. Okay. And we'll take 6 years all day, right? We'll take 6 years all day, because 6 years saved is the equivalent from a work perspective of about 520 days, right? 12,480 work hours, 520 days. And there's a lot you can do with 12,480 hours, 520 days. There's more opportunity for maybe things like affiliate rewards, right? Or more vacation, or more hobbies, or more education, whatever the case may be. Saving time is precious, because time for us, it can equate to money, but other things as well. So the opinion, or I guess the answer to the question, would I take my money out of my 401k and put it all into Bitcoin? Probably not, but I would take money out the 401k, because I know there are other vehicles, right, that can do better than a 401k. Because historically, 401ks aren't really for people's retirements. They were, we know they were made as a replacement for pensions, and they were cheaper for companies to offset the cost of providing for retirement for their employees by having their employees pay the cost of that retirement. So that's why 401ks were created, but they don't make as much profit as other vehicles could make. And so if you get a vehicle like an EasyBot that's giving you a higher rate of return and can get you where you want to be in less years, you're better off just using that vehicle as opposed to giving your funds to a company to manage. You can always do better with your own funds in an investment vehicle compared to giving your funds to a fund manager. Not only will you get hit with fees, You'll also miss out on entry and exit points because they're not working 24 hours a day, 7 days a week.